Hello everyone, this is Jay and good morning. It's already Friday and I know a lot of you can't wait till the weekend starts, and I'm sure some of you that are watching this video right now and this channel that are fan of this channel are retired probably too, so the weekend is the whole week pretty much, which is awesome. I can't wait until I get there. But in today's video, this is my Friday video to see what's undervalued in my portfolio. I already made my deposit. So I'm gonna take a look and see how am I gonna allocate my money. I did see some red. We're gonna take a look at the stock market map to see how the stock market was reacted yesterday, or where it's at as of yesterday, Thursday in the afternoon. So we're gonna take a look at that, and then we're also gonna take a look at one stock that in my last video, a few people commented. In that video that is on a dip right now, which I'm gonna bring it up to you guys so you guys can do your research. But before we start, please don't forget to hit that like button. I really appreciate how the channel is growing. We are over 250 subscribers, which is awesome. I really appreciate it. But let's go right into the video. So let's take a look at the stock market map. So I do see technology was pretty much in the green. Microsoft, Apple, all those companies, communication services, Google was also in the green. What I do see in the red was consumer cyclical, like Amazon, Tesla, and others. And then the energy sector was all red. If you guys see right here, Exxon, Shell, Chevron, all of those companies. So you can probably start taking a look at that sector if you wanted to start a position in any of these companies in that sector, for sure. Consumer defensive like Walmart. Walmart was down 8%. Wow. Maybe one that you want to take a look into right there. I don't like to invest in stores. If I ever invest in stores, the store that I will invest to, it will be this one right here, Costco. COST. I'll definitely love to start a position in that company. I really love Costco. I go almost every weekend pretty much. So this is the stock market map. I do see pretty much it looks like it was flat. So but there's some opportunity of buying right here. All right, so let's go into my dividend portfolio. These are all of my positions right here. SCHD is still my largest position at 24%. So we're going to take a look at my portfolio. And SCHD, it is in the red right now. It is $70.77. And I just made a purchase the other day. And it was like around $71 when I made the purchase. I could have waited a day, maybe gotten it $1 cheaper. But it's okay. I'm holding long term, so I am okay with that. Realty income, right here, it is at $53.09. I see realty income going up already. Not sure if you guys were planning on starting that position, but do your research in it. It is creeping up already. It went down about 2 weeks ago to like $45. And look at it now, it's at $53. So hopefully none of you guys missed this opportunity of picking up some shares of realty income if you wanted to add this company. But of course, this is not financial advice, guys. Do your research. But I am only in the negative by $124 right now. So it is moving up, that position right there. I'm definitely... What I'm going to be doing, I'm going to be picking up like $5 from now on because it's a very, very large position in my portfolio. And I want to grow other positions in my portfolio like VYM, which is right now at $104. I'm in the positive actually by $2 right here. My cost per share is $104.18. And right now it's $104.67. Main Street Capital. I am in the positive right now. I like my cost per share at $38. I think it's awesome, but I really want to continue growing this one to 25 shares. Realty income also, I want to grow it to 25 shares. I can't wait to hit that 25, but I'm going to go slow from now on. And just put like $5. Johnson & Johnson is one that their ex-dividend date is the 20th. So I do believe probably today will be the last day, or maybe Monday or Tuesday. it will be the last day to pick up some shares before it goes on X. Yeah, the X dividend date is on Monday. So I believe today is the last day to pick up some shares so you could get that nice dividend that they're gonna pay, if I'm not mistaken. So I want to pick up some more Johnson and Johnson today. I'm gonna see how much I can put on there. At least it is under my cost right now. It's at 150. I do think, and in my opinion, it is at a very good price right now. I really, really like it under my cost. Anything under 160, I really, really like Johnson and Johnson. So I'm gonna be adding some more of that. Procter and Gamble is still way above my cost per share, but it is one of my favorite companies too. They're growing very good. They're not an extreme grower, but they're still very good. They're a very good company. Their numbers are good. Their dividend is also good, and I really really like their products. It's like one of the this company, we buy a lot of their products here at my house, and pretty much we go buy it at Costco. All right. Then my next one, it will be Coca-Cola. Coca-Cola is very close to my cost per share. I really invested in this one. I tried to go as heavy as I could. I brought down my cost per share to $57.53, and right now it's at $57.15. I hope some of you guys took advantage when it was like around $51 and $52. I definitely made some purchases around those prices, so I was able to bring my cost down. And right now I'm only in the negative by $2.67. So that's the good thing about that DCA strategy that I like. I really like to DCA. I really like to put $10, $15. Just continue to buy fractional shares. My brokerage account is through Fidelity, so they allow that. I'm not affiliated with them, but it is the one that I chose to open a brokerage account. So he's definitely helping, and I really really like buying fractional shares. S&P 500 Fidelity Index Fund, I'm gonna continue adding into that one as always. Pfizer definitely still under my cost. $29. 77 cents. I added it in June when it was around $36. So my cost, I'm gonna continue to bring it down. So I'm gonna most likely buy some more today. Let me know your opinion in Pfizer also. I'm hoping I am not making a mistake, but I do. This is a good company. I really like it. I really always wanted to start a position, and I started in the dip in June. So going back into Pfizer, one of my subscribers definitely left a comment. He purchased more Pfizer, so I'm gonna go into the updates tab, and then we're also gonna take a look at the one stock that is being recommended. Or it was brought up because it's on a dip right now. So it is right here, just a dividend investor. Thank you so much for your comment. And he commented, I bought some CSCO today, a new position for me. On Monday, I bought some more PFE, which is the one that I was just talking about. Pfizer, great video again. Cheers. I really appreciate your compliment and for sharing this information. Just a dividend investor. And then Vested Interest, which is one of my favorite channels, he also commented right under this comment, big drop on CSCO today. I think it's heading back to its 52-week low. Great buying opportunity in my opinion. And we're going to take a quick look at it in Seeking Alpha. Let's take a look. So right now, as you guys can see here, it is down almost 9%, 8.5%, and it happened yesterday in the morning. So it was on November 15. It was around $53.30, and it went all the way down to $47.03. The 52-week low is $45.56. So if you always wanted to add CSCO, Cisco system, I do believe right now it is the opportunity. Of course, not financial advice, guys, but always do your research before adding any stocks or investing in the stock market. Don't just invest in it because we mentioned it in this channel right here. But this one right here, you can pick it up at a nice PE of 12.37. That dividend rate is $1.56 a share per year, which is good to me, in my opinion. That yield 2.93%, so it's almost a 3% yield that you can pick it up right now. Market cap for this company $215 billion, so it's definitely a very big company. And right now, it is a great opportunity. Also, in my opinion, I do not have this one on my watch list, so I do not think I'm gonna be adding it. But it wouldn't be bad to put those $144 in it. It will probably pick me up if I put $144 into CSCO. I would just have to do some research in it into the company. But if I put 144 divided by $48, it will pick me up like 3 shares right now. So I could pick up 3 shares. I will get like about $3, almost $5. So that a year for that position. I'll think about it, but let me do some research first before I do so, because I really want to add Visa as of right now. So let's go into their very quickly into their numbers right here. So right here, market cap $215 billion, total debt. So they do have some debt, $9 billion, $9.45 billion. But look at that cash on hand right now, $23.5 billion. So they can go ahead, if they want to, they can pay that debt and still stay with like another $14 billion on hand. So, and they can be debt free. So that's definitely very, very good business wise for sure. So the dividends right now 2.93%, as I've said before, and the payout ratio only 37.5%. That's definitely a very, very low payout ratio, which is awesome. These companies usually they like to reinvest back into their business, so that's why their payout ratio is also, they try to keep it very low. But at almost 3% dividend yield and a low payout ratio like that, definitely is very good. They're probably buying back shares too, most likely, because they have a lot of cash on hand. So that's definitely really, really good. The 5-year growth CAGR 3.90%. So it is above the 2% inflation. Not the inflation right now, because the inflation right now is definitely very, very high. But 3.90%, that's definitely pretty good. It's low, but it is still good. And then years of growth, 12 years of dividend growth. So definitely, as you guys can see here in the dividend growth history, it's definitely looking really, really good. In 2019, they were paying $1.38 per share, a year per share. Then 2020, $1.43, 2021, $1.47, and 2022, $1.51. So in this year right now, it's looking like $1.56. So it's that dividend growth continues with this company. So just do your research. Definitely thank you to both, to vested interest and just a dividend investor. Really appreciate it for bringing this up. And guys, if anyone sees any companies that you want me to show in this video that is on a big drop or anything like that, or has a great buying opportunity as vested interest expressed below, please let me know in the comment section, so we can all look at it. I could put it on the video. We can all look at it, and maybe it's a company that one of the subscribers was looking into, and is just waiting for a good buying opportunity. So definitely very, very good, and thank you so much for bringing that up. Now let's go back into my dividend portfolio. So Apple is up. I'm up 30% right now. I'm up $85. I wish I would have picked up a lot more Apple. The price right now is at $189. So it's definitely way above my cost per share, but I'm just holding right there with Apple. I like the green on Apple. MPW, I'm definitely down a lot, almost $300 right now. The price right now is $4.59, so it's like half of my cost per share, which is $9.70. What I've been doing is since it's so low, I've been buying one share almost every week, so I can continue to bring my costs down, and hopefully the company doesn't go bankrupt and I lose all that money. But for now, I am holding. I think that they will come through, and I think that they will be okay. You know, they have gone through a lot. This is a company that has been on the market for a very long time. They even went through the 2008 market crisis, and they came back on top. So hopefully it happens again. Starbucks is at $107. Right now I am in the green. My cost is $88. So I added a little bit when it was in the low 90s and mid 90s. So I'm happy that I did. I knew that it was going to go back up into the hundreds. So every time it goes back down to the 90s, if it does, of course, you know, I can't predict the future. I don't think anybody can, right? But if it goes back down into the 90s, I'll be adding some more. I really like Starbucks. I am planning on holding long term. I see their products in a couple stores, supermarkets, and of course, whenever I pass by a Starbucks, there's always a line. My wife tells me that the app is very nice and easy to use. So this is definitely a company that I'm planning on holding long term also. One of my last positions is Vici right now. One of my favorite ones. Price is $28.70. My cost per share is $30, so I'm in the negative only by $10. I definitely want to add some more Vici. They have very good dividend growth. Look at this company. Do your research in it. If you're planning on adding a REIT, this is definitely one that I really like as of right now, especially with that dividend growth. They have a very good dividend growth. And then my last one right here, it is Kenvue, KVUE, the spinoff from Johnson & Johnson. I got almost 9 shares. I added this position on IPO. And I am already at almost 10 shares, so which is awesome. Right now, it's on a dip at $19.61. It's been around that price for like a couple weeks already. So if this is a company that you were looking into adding into your portfolio, definitely right now it is the time. But of course, do your research, guys. All right, let's go take a look at another one that I'm really keeping an eye on, which I'm going to go back into Seeking Alpha, which I'm not affiliated, but it is one that I use to research my stocks. And this one is Visa, which I'm looking to adding into my portfolio. It just keeps going up. Now that I made the decision that I want to start a position in it, it just continues to go up. It's up 18% in the year. Is definitely very, very close to that 52-week high of $250.06. The 52-week low is 202. So definitely it is very, very high right now. But the plan for it that I'm thinking on doing is to buy maybe on a daily basis, buy like $20 to $25 until I spend the extra cash that I have on hand right now. So I'm gonna see if I can make that decision next week. But I think I like this one. I'm also looking at McDonald's, which it is under $300 right now, and it is $276 actually. So it's going back up into the 300s, which is where it was at, like 290s, the mid to high 290s. But it went down all the way to 246. I just, a lot of times I'm busy at work, so I am not able to take a look at the market. This is why I miss these opportunities. And then in the afternoons, sometimes I'm just busy also. I have very little time to take a look at some of these things, some of these stocks. But this is another one that I really, really liked, and I wanted to start a position. But I think I'm going to go with Visa. Definitely a very good grower, very good company. A monopoly pretty much in their sector with MasterCard, since they are the middle guys right there. So definitely one that I want to add. So my portfolio, it is almost at $9,000. I did make a deposit today, so it is much closer to that $9,000 as of today. I just did not add it in here. So you guys can see it on Sunday's video. So as some of you some of the subscribers know, and anyone that is new to the channel, every Sunday I post a video in the morning, giving an update of everything that I purchased today on Friday. I'm a DCA investor, so every Friday I make a deposit and I distribute that or allocate that money through my holdings and through anything that is undervalued in my portfolio. And of course, through my ETFs. Those are going to be the core holdings of my portfolio, and I'm continuing to grow those. And then I give an update on my portfolio, see the value of my portfolio, and then also, of course, if we go all the way to the right, take a look at the estimated yearly dividends to see how it's growing. Right now, I have an estimated in the next 12 months, I should get around $369.11 after I made the move of selling Stag, which before when I had Stag, it was like around $366. And now it is at around $369 a year in dividends. So this is definitely, I feel like it was a good move. Definitely, I put it through 2 ETFs and one company that grow their dividend much faster than Stag. That was the only thing that had me to that made me make that decision with Stag, which it was their dividend growth is only under 1%. So it's very, very small. I don't like how slow they're growing their dividend. I do think that that Stag is a company that if you hold for the future, but this is just my opinion, guys, not financial advice. But if you hold Stag for the future, especially with e-commerce growing up, it'll probably have some better dividend growth. But as of right now, I just want to make my money work better. And I do believe that I make a good decision, putting some into all realty income and then the remainder of it to SCHD and VYM, which are going to be 2 holdings that I'm holding forever and I'm passing down to my kids and grandkids. All right, everyone. So please let me know in the comment section, what are you purchasing today? Any stocks that I'm missing right now that are at a 52-week low, that are on sale, that you can tell me, hey, Jay, look at this. Definitely a great buying opportunity that I can do some research. And maybe instead of Visa, I could add into my portfolio. Visa is definitely at the top of my list to add it. I've been wanting to add it for a very long time. Definitely a very good growth company. But please let me know, and please don't forget to hit that like button and subscribe to the channel. Definitely appreciate that how the channel is growing. Very, very happy about the channel. I did not think the channel was gonna grow the way it's growing. I'm gonna try to continue to do new things and change the channel slowly, little by little, into the better. And hopefully you guys stay subscribed and we get even more subscribers. All right, everyone. So have a great day. Have a great weekend. And I'll see you on the next one on Sunday. Thank you, everyone. Disclaimer, I am not a financial advisor. This is for entertainment purposes only. Please do your due diligence and research before investing in the stock market. Thank you.